Hi, I'm Max Keiser. This is the Keiser Report. Somebody's doing something right because these brokerages are shrinking. They're becoming baby brokers. That's right, they're shrinking. They're downsizing because they suck. All right, Stacy Herbert, tell me more.
Max, London brokers shrink as debt crisis bites. London stockbrokers are shrinking as Europe's sovereign debt crisis and competition from international firms squeezes revenues and fees.
Yeah, here's little Jamie Dimon. Oh, and here's little Lloyd Blankfein over at Goldman Sachs. Look, I'll play Ben Bernanke. Here, suckle on my quantitative easing, little Jamie Dimon. Oh, and this is for Lloyd Blankfein. They're suckling on Ben Bernanke's quantitative easing. That's right.
Yes, brokerages in London are apparently shutting up shop, laying off brokers, and heading out of town. Now, Tim Linacre, who is stepping down as chief executive officer at Panmure Gordon & Company, a 135-year-old brokerage, said this isn't just a blip. This is much worse. It's a desert for activity, which is why you are seeing some firms throw in the towel. It's partly due to the collapse in the IPO market, but also the fact that it appears that these smaller brokerages just can't compete with the large firms in terms of the high-frequency trading. You know that most, like the likes of Goldman Sachs and JP Morgan, can trade at a speed faster than the speed of light. So these firms can't afford the multi-million-dollar co-located computers to front-run clients around the world.
That's right. They can use high-frequency trading to go back in time and steal money from people from last year.
You know, they're crying here that these brokerages are shrinking, but it's better than their actual clients who are evaporating, Max. Guest posts, legality of MF Global asset transfer questioned. Commodity Customer Coalition founder James Koutulas is requesting that MF Global bankruptcy judge Martin Glenn investigate 3 potential legal issues that are said to have occurred in transferring of MF Global assets. The key issues include the fact that JP Morgan was able to purchase MF Global bonds at a discount without any open bidding process, and the assets were apparently sold without disclosure to or approval from the U.S. Bankruptcy Court of Trustees. The third issue centers on JP Morgan seeking special favors from the Federal Reserve to receive priority treatment over investor segregated fund accounts.
Jamie's dirty. Bad, Jamie, bad. You give him a spanking. He's a bad boy.
Well, Max, this is important. It's more than just that. I mean, it is as absurd as that, but it is the fact that earlier in this year, we saw this little clip I'm going to turn to here where Jamie Dimon stood up and spoke to Ben Bernanke, berated Ben Bernanke, saying, oh, you know, we've done this list. He lists 5 things that the industry has done to make the financial system more sound. Look at Ben Bernanke's face as he is like in ecstasy looking at Jamie Dimon speaking to him.
Well, Jamie, that list you gave me made me feel pretty good there for a while because it sounded like we're getting a lot done.
Yes, I agree.
That's great.
Yeah, well, this Ben Bernanke is like looking at his little baby there, you know. The mothers always look enduringly at their children, even if they might look like they got hit with a bag of nickels. You know, Jamie Dimon's got that ugly mug because he's a no-good mundrick. And Ben Bernanke's looking at him like, oh, isn't he adorable, my little baby Jamie Dimon?
Here is a guy who's able to go to Ben Bernanke, change the rules and regulations to put himself in front of tens of thousands of MF Global clients. In congressional testimony on December 15, 2011, it was discovered JP Morgan asked the Federal Reserve to write a letter claiming that the segregated funds should not be categorized as client money. This is what James Koutulas is responding to. And he says in response to this, JP Morgan wanted a get-out-of-jail-free card from the Fed? Guess what? That doesn't fly with me. Their hubris is so severe, they think we don't know the industry, like we are Occupy Wall Street radicals or something, and don't have a clue.
Well, I mean, it's amusing to watch these bankers lined up, you know, in front of Congress every once in a while giving testimony. You know, risk is the new tobacco, basically. You know, risk will kill people as surely as smoking cigarettes will. And these major risk peddlers, who the externality of their corrupt business model is to spew risk into the environment, Just like, oh, I don't know, energy companies spewing oil in the Exxon Valdez, kill a few million fish. Here you got J.P. Morgan and these other bankers spilling risk that they have no accountability for. They don't have to pay for it. People are choking on it and dying on it. And do they have any accountability whatsoever? No, they go in front of Congress and they get handouts. They get rewards because it's a kleptocracy.
Well, James Koutoulas here is, however, betraying the fact that these people think they're closer, like they're smarter than the Occupy Wall Street people, the people that are down in the bottom 99%, the people who are not professional traders but have been defrauded, whose 401ks are down by 70% in some cases. He thinks that he's somehow above them, that he's not going to be a victim of Jamie Dimon. So here he is, divide and conquer, that he's not on their side, because he actually is calling for the hashtag boycott JPM. That's the stock symbol for JP Morgan, hashtag boycott JPM. And this is the campaign he's launched. But he's separate. He's different from Occupy Wall Street, when in fact they're the same. They're the victims of the same exact criminals and the same exact criminal enterprise run by those same exact criminals.
If you want to make a ton of money in 2012 and you're a professional hedge fund manager, collude with your other hedge fund managers and sell short JP Morgan stock, because their balance sheet means the stock price equity is worth zero. I mean, it's as simple as that. I assume that you're in the, like John Paulson. He's lost 50% of his clients' money this past year because he's an idiot. He made billions of dollars last year by leveraging the subprime nightmare to his benefit. This year, he lost 50% of his money. He should get together with some of the hedge fund buddies, sell short JP Morgan stock, sell short naked.
John Paulson's one guy. He already made his billions from his connection to Goldman Sachs. We're saying right here, right now, here, this guy is a trader. He might only have $1 million. He might only have $10 million. But so did John Paulson before the subprime collapse. He made his billions because of his close connection to Goldman Sachs. Here we're saying this is blatantly obvious. This is a criminal racket. Here, you, James Koutoulas, while you're boycotting J.P. Morgan, why don't you short their silver position? Why don't you make some money? Why don't you take it to the next level instead of issuing these idle threats?
That's a good question. I mean, whether it's this guy Koutoulas or Occupy Wall Street, they like to talk and flap their gums, but they refuse to engage in the actual strategy that would destroy this financial terrorist. Buying silver. They're short silver. They stole it out of MF Global accounts to cover their silver, for one item. Number two, they're getting the Federal Reserve to cover their silver shorts and to change laws on the fly to cover their silver shorts. Hello, you buy silver, you put them out of business. Do you want to take terrorism off the market? Do you want to take terrorism out of the front line of your life? Do you want to free yourself from terrorism? Do you want the TSA sticking your hand up your schning and looking for silver to cover JP Morgan silver shorts? Do you? Do you? Do you? Or are you a baby? Or are you little baby suckling at Ben Bernanke? I want more free money. I want more food stamps. I'm a little baby. I can't think for myself. Is that you? No, baby. No, no, no.
Well, now we're going to turn to another call for boycott. Now, this woman is Ann Barnhart. She shut down her commodities trading firm. She was an independent commodities broker. And she was interviewed by Peter Schiff. She shut down her firm because of the MF Global fraud. But here's a clip where she's calling for the boycott of the entire financial system, in particular because the bankruptcy judge and the Fed apparently allowed for this bankruptcy to proceed as if MF Global were a securities firm rather than a futures firm. Peter Schiff asks her, well, what's the difference?
I have to explain this, sir. What that means is that in a securities firm bankruptcy, the debtors or the creditors of the company go to the front of the line and the customers go to the end of the line. In a commodity brokerage bankruptcy, the customers, needless to say, go to the front of the line. MF Global had less than 400 securities accounts, and I believe they had more than 40,000 futures accounts. So this was willfully set up to screw the customers and put specifically J.P. Morgan at the front of the line.
Yeah, once again, you got the bank. J.P. Morgan gets Congress to change laws on the fly to suit their needs as a predatory terrorist. Oh, is that a bad thing? I would think so. Hey, let's call the White House. Nobody's home at the White House. This guy is out golfing.
But going forward, Max, it doesn't matter who the president is. It could be Ron Paul. It could be Sarah Palin. It could be Hillary Clinton. Whoever is in that position, whoever replaces Ben Bernanke, whoever replaces Timothy Geithner, there is always going to be between you and your wealth Jamie Dimon and the likes of him. Here is, again, that little clip of Ben Bernanke responding to Jamie Dimon.
Well, Jamie, that list you gave me made me feel pretty good there for a while because...
Yeah, well, it's a club, you know, and they're stealing everybody's money. That's true.
And no politician's going to save you. And here I'm going to turn to Mark Faber. Here are some clips from him of what he thinks about this whole derivatives market going forward. He sees a big collapse. Let's turn to this clip here.
And I don't know when it will happen, but I'm convinced that one day the whole derivatives market will cease to exist, will become zero. And when it happens, I don't know, but you know, you can postpone the problems with monetary measures for a long time, but you can't solve them.
So, Max, he went on to say that Greece should have defaulted to send a message that not all derivatives are created equal because it depends on the counterparty.
How can you have a counterparty on $700 trillion in derivatives? There are no counterparties unless there's going to discover through the neutrino, faster than light particle, a parallel galaxy of people who like to buy derivatives from the Wall Street. I don't think they're going to make good on it, are they?
This is command and control communism that you see being operated by the central banks, of which JP Morgan is a member of that. So he's saying that they want all derivatives to be equal. Wealth must be redistributed equally to each unit of a credit derivative, even though they are not all equal.
Mm-hmm. Right. So it's like making those farm equipment or cars during a previous communist era country and price fixing and saying that's wealth. The fact that the ancillary markets break down and there's no way to service those cars and they're completely uneconomically created and it's creating massive poverty in the system is overlooked. Similarly with the derivatives. They think they're all the same. They're coming off the assembly line of fraud on Wall Street and they're causing incredible poverty. But the ideology and the dogma and the central planners in Washington and the propaganda say that there's something else happening. Meanwhile, the other countries have already been through that nightmare, have grown up, and they're ready to lead the world. The BRICS, Brazil, Russia, India, China, they're ready to take it forward, to leave these idiots behind.
But you also hear, Max, in America over and over, especially through Fox News, that somehow it's the workers. It must be the workers because Ayn Rand and Friedrich Hayek told us this stuff, that it must be those socialists, that we have to find the socialists. When it's sitting there right in front of their face, the command and control of interest rate policy, but also this policy towards credit derivatives, that they're all being treated equal.
Mm-hmm. Well, absolutely. I mean, workers are essential to create the capital upon which you'd have a free market capitalist system. If you turn all of your workers into merely consumers that are borrowing money and that money is borrowed at artificially low rates, then you're hollowing out your economy to the point of economic collapse, which is happening in the United States and around the world as we speak. Okay, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away. Much more coming your way, so stay right there.
आज इनिशिएटिव खाता है तो जो ना थोड़ा सा लगेगा और तो लोग हैं क्या रहा है
witnesses to history in the making. Testimony. 10 stories that shaped 2011 on RT.
Hi, I'm Max Keiser. Welcome back to the Keiser Report. Time now to go to Bangkok to talk with John S. Kim of SmartknowledgeU.com, fighting bankster fraud and helping to reestablish monetary freedom and liberty. John S. Kim, welcome back to the Keiser Report.
Thanks a lot, Max. Always my pleasure to be back.
Alrighty, now, we all know about the bad bets on European debt, but what role did gold and silver play in the collapse of MF Global?
Actually, what I saw was pretty interesting in the open interest positions for futures. The second phase actually happened after MF Global declared bankruptcy, because what you had happen then is I think you had people distrust the futures market as a way to take physical delivery, because, you know, as we both know, there are people that stood for delivery for both gold and silver, but ended up, you know, as far as I know right now, still unresolved, right, and haven't received their money back. So you saw a second period, the last 2 weeks of November, again, where open interest in the longs for gold and silver futures dropped a respective 12 and 13% again. So you really had a market drop-off in the open interest in futures in the gold and silvers market because of the MF Global collapse.
Okay, so this has always been the biggest bone of contention that the big silver vigilantes and gold vigilantes have around the world, whether it's Eric Sprott in Canada or others. You've got the paper market, the COMEX and the LME, and they have broken free of reality, and they simply create price discovery based on outright fraud, which is now evident in the MF Global situation. So what sort of changes to gold and silver derivative contracts happened at the time of MF Global's collapse, as far as you can see?
Actually, I took a look at the aggregate reports, the commitment trader reports that the CME releases, and you don't see huge differences and shifts in open interest in the gold and silver futures. But when you look at the disaggregated reports, it becomes a different story. So the disaggregated reports actually breaks down the sectors by producers, by managed money. If you look at the managed money category, which typically entails commodity trading advisors or registered commodity pool operators such as MF Global, then you see something really interesting, Max, because you see from about the end of August to mid-October, you basically see the managed money longs in gold and silver crash. So there's a 34% drop in gold futures in the long positions and 45% in the silver longs just from end of August to mid-October. And then the bulk of that was actually in a 2-week period between September 13th and September 27th. So I think, you know, what you saw was, although I don't know exactly how much of that was because of MF Global, I don't think it's a coincidence because, you know, MF Global basically was downgraded on October 25th and declared bankruptcy on October 31st. So I think some of those accounts, those futures accounts, were, you know, beginning to be frozen in the months, you know, up to when MF Global declared bankruptcy, and that's when you see the huge drop-off in open interest in the long positions in the gold and silver futures market.
All right, now, in congressional testimony Thursday, December 15th, 2011, it was discovered that J.P. Morgan asked the Federal Reserve to write a letter claiming that the segregated funds at MF Global should not be categorized as client money. Your thoughts?
My thoughts are that's absolutely ludicrous because what are segregated accounts? If the clients can't have their money protected in segregated accounts. I mean, it's kind of the same analogy would be unallocated accounts versus allocated accounts in physical gold and silver that, you know, bullion banks hold for customers. So I've always said never hold any bullion in unallocated accounts of any kind, and preferably not even in any bullion banks. But if you can't have allocated accounts, in this case, if you can't have segregated accounts protected, then, you know, what rights do clients have? They have none.
Right. Also, when the MF Global went bankrupt, J.P. Morgan lobbied the regulators to do so under a sub-Chapter 4 of Chapter 7 bankruptcy, which would mean that the firm was considered a securities firm instead of a futures firm, which made J.P. Morgan the senior creditor. It's, I guess it's technically not illegal, but it's still a hanging offense in some courts. Now, the trustees for MF Global have floated the idea of liquidating clients' gold and silver holdings. Your thoughts?
Well, in some sense, I think they already have, right, Max? Because they certainly liquidated like futures positions that stood for delivery. Like there were definitely people that held large amounts in gold and silver futures contracts, long positions that stood for physical delivery, and they're not getting their physical gold, they're not getting their physical silver. Those accounts have been offset or liquidated, and they're not even sure if they're going to get 100% of their cash back. So in some sense, I think it's basically, it looks like straight theft, because there have been, I've read some instances where people have tried to match up the increase in the registered silver of JP Morgan's accounts, and it seems to kind of almost match the amount of physical silver, the amount of silver futures and gold futures contracts that stood for physical delivery. So I don't think that's a coincidence that those numbers almost match up.
So if somebody's trying to buy $1 million of silver on the COMEX or gold, how do they do it? Save or buy it out? How do people buy volume in precious metals now? Because if the COMEX is going to or the London LME is simply going to do the bidding of the banksters, how do people buy bullion in size now in bulk, physical?
Sure, I think there is one silver lining in this cloud, in this totally criminal MF Global case, and that is the fact that it's going to basically change the mechanism by which large buyers seek to purchase large amounts of physical gold and physical silver. We've already seen that happening. I think it was Mark Kudafani, he's the CEO of Anglo Gold Ashanti, and he basically said for the past 18 months, there's been a lot of tightness in the physical gold supply and in also the physical silver supply for very, very large buyers. So what's happening, especially in light of what happened to MF Global, large buyers now are circumventing the totally corrupt criminal paper markets, and they're going directly to the producers. So they're going directly to the gold miners and the silver miners, and they're asking to buy millions of dollars worth of bullion directly from the miners. So I think actually that's a good thing that will come out of this, is that they'll circumvent the fraudulent middleman here, in this case, the COMEX or the LME, and they'll go directly to the producers to buy large amounts of bullion.
Yeah, some are speculating that we will see two prices quoted. We'll see the paper price and the physical price coming up in the next year, because you'll have the actual price discovery going on in physical bullion between buyers and miners, and then you'll have the corrupt paper price that's manipulated by JP Morgan and Wall Street to feather their corrupt balance sheet fraud. Do you see two prices emerging in 2012?
I think we've already seen that, Max, because I've been following even the latest dip, like at the end of this month, and when silver was at trading intraday one time at $27.99 an ounce, I went and looked at like the Monex and other bullion dealers, and I still saw 1 ounce silver coin selling for like $31.74. So that's a 13% premium, like over the futures price and over the spot price. So I think we're already beginning to see this. And my feeling about these paper derivative markets is I think that bankers deliberately set that up to suppress gold and silver prices, to manipulate prices like in their favor so they could steal from clients. I don't think it was ever intended, like as I said, is the mission of these paper derivative products to allow producers to hedge. I think they wanted to set up like a fake market, a fake paper market, whereby basically today it's ridiculous because the futures and spot price for gold and silver have nothing to do almost with the physical supply and demand determinants of gold and silver.
All right, let's take a look into the crystal ball for 2012. JS Kim, what is your outlook for precious metals in 2012? Any thoughts on that?
Well, as far as the time horizon, it's always very difficult, right, Max, to predict. I don't like, giving predictions like gold is going to be at 2,000, silver is going to be at 70 or 80 within a certain time frame. But I will say that I believe that gold and silver will still rise multiples of where they are right now, both gold and silver. It all depends probably on how long this fraud continues in the paper market. So if the COMEX defaults, of course, we can see gold and silver double or triple overnight. So it just depends upon how long they can keep kicking the can down the road and keeping the fraudulent mechanisms for controlling the price of gold and silver short term going in these bogus paper markets.
Right. Well, technically, COMEX is defaulted already. They don't have the bullion in inventory. That they're just floating a lot of faulty accounting, and they're trying to keep it together with Scotch tape and rubber bands. I mean, the COMEX they ran out of inventory a year ago. So they're just they're just pretending as if they have inventory, and the market's pretending as if they have inventory. But at some point, they're going to have to disclose that they've defaulted. I suppose that would be a big boost to the prices at that point, because people would realize that they've been lied to about COMEX's inventory.
Sure. But I also think even what the CEO of AngloGold Ashanti said, that people are now circumventing the COMEX, circumventing the LME, going directly to the gold miners and silver miners to buy bullion. I think that will be a game changer, because that will mean that the bullion banks will have a more difficult time getting the tiny fraction, right, of physical gold and physical silver that they use to back the futures markets, and that they use to leverage gold up 100 to 1, silver 165 to 1 at times. So that, could usher in also a default on the futures markets. So it'll be, I think 2012 will be a very interesting year. We'll see extreme volatility in gold and silver prices. But at the end of the year, I think we are going to see much, much higher gold and silver prices.
Okay, finally, how about Asia? The appetite for precious metals in Asia is still very strong, correct? Do you see that continuing next year?
Oh, definitely. I definitely see the appetite for precious metals growing, especially since, in Asia, we don't have a lot of the propaganda and brainwashing through the academic system that we have in the Western world, as far as gold being a barbarous relic and not a wise store of value. So, that is largely absent from a lot of the Asian educational system. So Asians really value gold and they value silver. So I think we'll continue to see strong buying pressure in Asia in both gold and silver markets, the physical markets, that is.
All right, JS Kim, we're out of time. Thanks for being on the Keiser Report.
Okay, thanks a lot, Max.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, JS Kim of SmartknowledgeU.com. You can follow JS on Twitter at SmartknowledgeU. You can follow us on Twitter or Facebook. You can just look up Keiser Report. You can send me an email at keiserreport@rttv.ru. Until next time, Max Keiser saying bye, y'all.